Well, it looks like our marathon runner didn't just finish the first mile. They blew past the finish line and set a new personal record. In my last video, we talked about SoFI's suspiciously cautious guidance. The data suggested they were setting a very low bar. It turns out they weren't just being cautious, they were setting the stage for something much bigger. The stock soared on the good news, and then it got hit by a reality check after hours. If you're short on time, here is the single most important takeaway. Our thesis was correct. SoFi smashed their earnings expectations. But they immediately used that moment of strength to announce they were raising $1 billion by selling new stock. This is why the chart looks like a heart attack. I'm going to explain why this isn't panic. It's a calculated strategy. Hello again. For those of you who are new here, my name is DataCat. I spent a long time as an analyst inside a Fortune 50 company, living in spreadsheets and trying to explain data to people who had the attention span of, well, my current office mate when the laser pointer is off. I traded that in for this. My goal is to look past the headlines and show you what the numbers are actually saying. Since this channel is still pretty new, if you find this kind of no-hype breakdown valuable, consider subscribing. It really does help. For those of you who watched the last video, welcome back. Let's see how our analysis played out. So, the first part of the story went almost exactly as the data suggested. We said that management's guidance of 3 to 5% growth seemed deliberately low, especially when their historical average was more than double that. Well, they didn't grow by 5%. They reported adjusted net revenue of $858 million, which was a 44% increase from the same time last year, and it's actually growing quarterly at the 11% median I last mentioned. That's not just beating guidance, it's making guidance look like a joke. We talked about member growth being a key leading indicator, and they added a record 850,000 new members, almost at 12 million members now. We talked about the regulatory tailwind from the Big Beautiful Bill Act funneling high-quality borrowers to their lending business. That all happened. The core business is a rocket ship. They posted $97 million in net income, their 7th profitable quarter in a row. The market saw this, and the stock took off. The good news was indeed very, very good. But this brings us to the big question. Why? Why guide so low when you know you have a monster quarter in your back pocket? And the answer to that came after the market closed. Just as everyone was celebrating, SoFi announced they were selling roughly 72 million new shares to raise $1.5 billion. This is why the stock dropped over 6% after hours. And it comes down to a concept every investor needs to understand: dilution. Imagine the company is a pizza. Before this announcement, there were a certain number of slices. By issuing 72 million new shares, they just cut every existing slice into a smaller piece. The company, the pizza, is still the same size, but your individual ownership stake is now smaller. Future profits get divided by a larger number of shares, which directly impacts the value of your holding. The second piece is the price. They offered these new shares to big institutions at $20.85, which was a discount to the closing price. This effectively puts a short-term cap on the stock, pulling the market price down toward that offering price. So why would they do this? Why pair incredible news with news that is guaranteed to drop the stock price? It's a strategic trade-off. They used the fantastic earnings report to get the stock price as high as possible, creating a position of maximum strength. Then, from that peak, they raised a massive war chest of cash. It's a calculated bet. Management is making a choice. Accept some short-term pain from dilution to fund their massive long-term ambitions. All those things we talked about, expanding their loan platform, the huge potential in the remittance market, investing in AI, that all requires capital. A lot of it. It's like my cat when he's stalking a toy. He'll do this little crouch, getting lower to the ground. It looks like a retreat, a step back, but he's just coiling the spring to launch himself across the room. SoFi just crouched. They're betting this $1.5 billion will allow them to launch themselves into becoming a top financial institution. So what does this mean for you? It means the story just got more complex, and you have to decide what you believe. First, what is your time horizon? If you're a short-term trader, this dilution is a major headwind. I don't even have to pull out the chart to tell you this will most likely cause some major price movement volatility in the next couple of weeks. But if you're a long-term believer, this capital might be the very thing that makes the long-term story possible, and that volatility could become an attractive buying opportunity. Second, do you trust this team to spend that $1.5 billion wisely? Their track record, as shown by the earnings report, is excellent. But on the other hand, as a former data analyst, I feel obliged to bring this out. The execution risk on such a large amount of capital is real, and more importantly, the market will also view it that way, potentially halting an upward price movement in the short term. And finally, what's your interpretation? Is this a strong company making a brilliant move to accelerate growth? Or is it a company that just made your shares worth a little bit less? The bull and the bear case both got stronger on the very same day. The convergence of factors we talked about in the last video is happening, but it requires fuel. This is the price of that fuel. I'm DataCat. I'll be here sifting through the numbers. Let me know what you think in the comments. Was this a brilliant strategic move or a frustrating outcome for shareholders? Alright, that's all for now. I have to go. Analyze the dilution of my cat's affection now that he's discovered he can get treats from the neighbor. It's a competitive market. Stay sharp, stay curious.